Hello, traders. It's 8 a.m. Chicago time on Thursday, the 7th of September, 2023. Thanks for joining me this morning. This is, of course, episode number 2532. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So thanks always, Vernon, for the sound check. That really helps me. Sometimes I find myself talking to myself before somebody says something, and it turns out that the mic didn't turn on or there's some issue. So that really helps. I don't have a sound engineer. I'm my own sound engineer. Let's take a look at the Convergent Trading pre-market summary sheet this morning. Risk off sentiment. Look at the NASDAQ. The NASDAQ's down 133 basis points, getting whacked for 200 points here. The S&P has fallen below the 4450 now. If you recall, 3 or 4 sessions ago, not including the holidays, 3 sessions ago, we were knocking the door of 4550. We're more than 120 points below that, or 115 points below that or so, and 110 points really. And we are walking into a pretty important area here, in my opinion, when it comes down to the S&P. But mild risk-off sentiment so far. Again, the NQ is getting hit pretty hard here. If you recall, over the last couple days, I've been talking about how the NQ is relatively stronger. What's going on here? Are you seeing the pre-market summary sheet in front of you? Because the preview that I'm looking at on YouTube isn't showing it. There it is. So that's where we are. I'm not going to go over earnings. Really, the bulk of what's important with earnings is behind us. We're now almost, this month is going to close out Q3, and we'll have a slew of those to talk about. But right now, key earnings not really in play. Chinese balance of trade lower than expected. Imports and exports higher. German industrial production lower than expected. And then you could see the rest of it. The thing, we were holding up okay-ish. We had sold off in the overnight session a little bit. We were holding up okay-ish until the initial and continuing claims numbers came in, and they were pretty hot this morning. The initial claims came in at 216,000, expected at 234,000. The prior is 228,000. So the job market's pretty hot, and of course, that's a drag for interest rates. Continuing claims came in at 1.679 million for last week versus 1.715 million expected. Again, pretty hot. Unit labor costs also came in pretty hot at 2.2% versus 1.9%, which is kind of inflationary. And in the 4-week average is still high at 229,250. So overall, that just isn't what the Fed would want to see. A raft of Fed speakers today. We started out with Fed's Harker here speaking at 10, Fed's Goolsbee, Fed's Williams, then Fed's Bostic, then Fed's Bowman, then Fed's Logan. All of these guys are kind of coming in and sharing their thoughts on the economy. So news flow is important. If you're a Convergent member, make sure you have your news feed on so you know what's coming through. Doesn't mean you should trade it. I don't recommend you trade the news, but it's important to know that it's coming and you get the warning that somebody's about to talk or whatever. And hopefully that helps steer you away from trouble. Other than that, we're looking at the S&P that has traded 219,000 contracts, which is pretty solid volume for the overnight session so far. 99% of the inventory is short, meaning 99% of that 220,000 traded below yesterday's close. And we have 37 points of range, which is more than we've seen in some time in terms of the overnight session. The point of control shifted dramatically down to 44.36 from yesterday's overnight session. And so what we have is a market that has rounded and is turning over. Look at silver. Silver down 80 basis points. Copper down 80 basis points. We looked at the opposite earlier this week where we were pushing higher, and I talked about how, copper, silver, and a few other metals are very important, can be very important commodities for growth, and they tend to respond pretty quickly to any perception of risk on or risk off. The other one that I'd like to point out to you is the crypto complex, the main crypto tokens. They've been kind of moving down and continuously being pushed down. If you recall, Bitcoin was, I don't know, I think it was challenging like 34,000 or so not so long ago. It's down at 25,000 now. So that's another thing to kind of keep an eye on. What was expected yesterday versus what we got? Just a quick review. This is the video from yesterday. Let me turn off my camera here so as not to confuse you because there are two of me on the screen. Again, this is yesterday's video. Here we go. This is yesterday's video, and the primary scenario, the number one scenario here, is an attempt higher and a push to take out that 44.86. And what did we talk about at length yesterday? Somewhere on this video, I covered, I really beat the heck out of it. Let's take a look here. Winding back, winding back, winding back. That's the NASDAQ. Actually, this is the prior day's plan, so I don't know where I put it. I don't know, folks. Maybe this isn't important. But we talked about yesterday. We talked about 85 being a key test area, and if it doesn't hold, we're looking at 68, 65, and then beyond there, we're looking for 57. 57 is the bottom of singles. So the main idea behind the plan or the outlook yesterday, and again, these are not trade recommendations. This is just my opinion on how things are playing out, what the context is. The idea is we are looking, because we're opening in a gap, unless the market is very aggressively responsive on the open, then the main idea becomes looking for a push higher as an opportunity to get short, and we're looking for the overnight low to be taken out. Very unlikely we'd head up to 45.03 for the overnight stat to take out the overnight high at 45.0375. Very likely to push lower, take out the 85, push to 60, 68, 65, and if that doesn't give us a bounce, then we're looking for 57, and then of course 44.50 comes in after that, and then the big one. What's the big price in that area? Let's see if you have your price map memorized. What's the big price below 44.50? And we're almost there now, 44.50. What is the big number that we're interested in on the downside? So yesterday, primary scenarios on point. We don't always get the market agreeing with our primary plan, but yesterday it was pretty much on point. So let's get rid of that and let's take a look at the actual market. Here it is. This is a beautiful rounded top. Come on, keep guessing. You got to get this one right. It's a number that's been in control. It's been an MC point of control, MC VPOC for such a long time. But we have a market that has pushed higher, rounded off, and is actually aggressively selling off. We're leaving, unfortunately, a gap behind us, so that gives us another area to pay attention to, and the number I'm looking for is 44.19. 44.19. That's the number we're looking for to the downside, right? That's your MC point of control. For some platforms, that's going to show up as 44.15 because you're using minute bars or you're using half-hour bars or whatever, but 15, 19 in that range, very important area. That is an area of previous acceptance and a whole lot of volume. That's where the market has wanted to balance for a while. And so yesterday we left behind some single prints here from the 75 to the 82, 83 area. Remember to keep that in mind. This leaves us with some poor structure within the day, so we have to look forward to that in the future. And then we have a gap we have to now carry forward. That's important as well in the case that we bounce and come back in. Remember, this contract's expiring in a week, and then you have daily expirations, weekly expirations, and so on. But next week is rollover starting Monday, and we are certainly walking away from where a lot of volume has taken place. Up top, you can see right here, just a bulk of volume there. A lot of those people are going to be wrong. We're below the 44.10, which was our key on Tuesday, 44.10 to 07. Once we get below, remember we came in on Tuesday and all I did was scream about, hey, if it gets below 45.10 to 07 and is weak retesting after it gets below it, if it's weak retesting, then we're definitely looking for 85. We're definitely looking for 68, 65, now 57. And then if it pushes through the 44.50, which it got to yesterday and really kind of made a very valiant attempt pushing 3 points, but then bouncing from there, 44.50 being a mid-century figure. See it here, see it here, right? Very often creating a response. Okay, it's either accepted or it's either accepted and we chop there as an area where there's churn, delta hedging, whatever, or we just run through and kind of use it as a support resistance. Just hard to tell what the market's appetite is, but we're retesting it here again. And then this morning we fell through it. As soon as we opened, we fell right through and pushed through to the downside on the jobless claims and have run down into 44.34. So what we've done is we've taken out the low here at 38.50. We initially tested down to 38.25. We had a little bit of a bounce this morning from 38.25. It looked like a one-tick failed auction for a minute, and then they pushed through the 34.75, and now we're back into this kind of balance area down here. So pretty decent turn here. You have imbalance, balance, new imbalance, and then continued imbalance coming into balance, and that's the market story day in, day out. Okay, so we talk about this stuff a lot. I'm repeating myself a lot, and it's really something that should bring you comfort that I'm repeating myself a lot, because despite the fact that the market is a random tick generator in the short term, it has a certain pattern, and that's what creates that's what creates the auction behavior and an opportunity for us, in my opinion, to be able to read it and play the probabilities. Nothing is certain in the market, and risk is always in play, but seeing that behavior gives us a little bit of comfort that we're kind of seeing things play out over and over and over. There's your 44.1920, right? We're right here right now. Really decent bounce into the close yesterday after testing below 44.50 yesterday. Pretty decent bounce to 71.50 settle, and now we are opening in a gap again. So we had a gap yesterday, we're opening in a gap again, and expecting this to slow down today. Gap following a gap is a rare event. If you look back, you won't see very often that we do a gap, then we leave a gap again. So I'm looking for responsive buying, and I'm paying particular attention to that 38.50 this morning, which is very close. Not 38.50, I'm sorry, to the 47. The 47 above, expecting responsive buying. If the historical probability, now I want to remind you that past performance is not necessarily indicative of future results. The move to 47 is expected. It has a higher historical probability than not happening. We expect the gap to be closed today, so I'm looking for that push, the responsive buying off of that news event this morning back into the 47 and potentially 44.50, and then expecting it to chop around in there before the next move happens. So the overall picture is that we are likely to kind of chop in, move back, chop in here, and then decide later in the afternoon. And then because of the amount of work we've done from the high with the gap and the run yesterday, we may be stretching a few weekly bands, and so it's very possible that it runs to prior settle and kind of sits right there at the 44.68 area, if you recall, and kind of sits up here, right up in this middle distribution. And if it rejects the prior range, starts to turn over, then we're looking for it to push to 44.19, 44.19 in French. Expecting it to push down there to 44.19, and then that will likely be the next place where two-sided trading is likely to happen, because it has happened there before. A lot of volumes traded there. We accept that price. We've accepted that price in the past as balance, and so on and so on and so forth. So that's the overall picture. Looking at the composite, now let's drill down and look at what has happened. What has happened in the overnight session? So if we look at the overnight session, you can see that there was a kind of a battle all the way through into the 44.50. See, this is the 44.50 right here. Nice little zipper, very nice structure there. A push into responsive buying into the 47, into 44.50 for me, sets up a potential short there. This would be a technical short setup, leaning against the zipper high here of 44.52. This creates one initial opportunity. Again, this is not a trade recommendation, this is an opinion. And if that doesn't hold, then we're looking for the overnight, the full session VWAP mid, which are on top of each other. The VWAP is going to get pulled very quickly on the open as volume comes in. It's volume-based indicator, volume weighted as it says. And then once that happens, if it gets into the 47 and is not able to fall back out and kind of bounces through into the mid here, we get a higher probability now of settlement being tested, knowing that we have a pretty decent size zipper up top, you know, between the 57, remember the 57 from yesterday, and then it becomes all about the 68 and prior settle at 71.50. So that's the scenario where we become responsive, regain some of yesterday's range and balance on the lower end of the distribution. Let's look at that here. You see that right there? This. So we get sucked into above the 57. We get sucked, which brings us above the mid for the session, for the full session VWAP, for the full session mid. We get sucked into this middle distribution, and then we go into this sideways chop. For tomorrow, what are we looking at on Friday for important figures? there isn't all that much. We do get German inflation on the European Treasury Open at 2 a.m. Eastern, and we get China's inflation at night. But during the day, there isn't much wholesale inventories and stuff. So this may be the scenario here where we just regain yesterday's range and hold the prior day's value, even though we had a multi-distribution profile. We spent quite a bit of time in the middle. You could see the market came back to the mid, and there was a lot of colliding here in this 4460 area. So as it pushes back up, I really want to monitor for responsive buying this morning. Remember, before the market turned lower, we talked about, hey, it's very likely to fail higher and start moving down. Excuse me. It's likely to push higher and start to move down, and it did that. And I'm not claiming that I'm right, because I'm always looking at different scenarios and weighing which one is more likely given the context. But it did manage to follow the expected auction structure and flow. Auction structure and flow. And this morning, what I'm trying to tell you here is to just be cautious about being incredibly bearish coming in, because the expectation at this point is it's very likely to come back in and be responsive. I'm not saying it'll guaranteed it'll do that. You're trading your own account, trade at your own risk. But I would be very, very cautious about that. So hands off as usual for the first 15 minutes is what's recommended. Let the market decide which side is strong, and then go from there. You do have some important areas above to monitor. You have your 3850, which we're into right now. That's the low of the rally day here. This is likely to be a kind of a chop zone, but I'm expecting it to kind of squeeze higher. And then the question becomes, do you squeeze out of the range, or do you squeeze higher and hold the range and start to extend up? So if it pushes up, puts in a high, pulls back and takes out that high, be careful, because now we're heading towards the point of control up there at 68 or so, and we're looking at settlement at 7150 before it might rest in yesterday's balance. Okay, the alternative scenario is we open, we make an attempt, and then we start to grind lower. And by the way, that sell-off yesterday was such a grind lower, in which case we're looking for the 44.19 once again. That would be scenario 2 today instead of scenario 1. I know we're trending down, but we're pushing a few bands, and that's causing me to take pause. We're looking for 44.19 as a key target below. Those are your kind of milestones. In the NQ has been relatively stronger, right? I've been talking about the NQ being relatively stronger, and it has been, and still is. The NQ did not clear its entire singles range yet, still has some single prints to go through. The NQ has not taken out that rally day low, right? And the NQ has 15.050. Man, the 15.050, this right here, this MC point of control. So it's got a little bit of distance to cover, about 150 points, and it's already down. The NASDAQ was already down about 1.3 or so percent. It's down about 1.25% currently. But the NASDAQ also creates this big opportunity. If it does continue to sell off on this weak structure, the NQ creates a bigger opportunity, in my opinion, to the downside. Okay, if the NASDAQ becomes responsive, which for the NASDAQ, this is a relatively big gap, then it's not likely to make it into the prior day's range, even though the ES is relatively stronger, and it's very likely to make it into the prior day's range. So if the NASDAQ's responsive, you're looking for it to struggle at the 15,300 or so, the top of these singles, and then later in the day, it might run into the prior day's range. If it fails to fill the gap, then it's got a lot of room to the downside again to 15,050 as your MC point of control for this entire region. That would be the NASDAQ target. Looking at crude, what a runner. This is a champion right now, and it's got a lot of news flow going for it. Yesterday, as I said, it opened inside of the prior day's range, which was a driving day, below value. And the initial idea for crude is to sell the 87.75 to test. And that, we saw that take place. It kind of sat sideways, and then it ended up pushing and holding right below that 87.75. And look at the high so far. Look at the high so far, 87.74. The overnight high is 87.74. We talked about 87.75 yesterday, so missed it by a tick on the overnight high. On the retest, crude is in balance. So as trigger happy as you might have been on this rally, you're going to want to watch out, because again, crude has point of control inside a point of control. It has value inside of value yesterday, and it's opening in value. So you might want to just kind of sit back on crude and be more patient here. That's just an opinion. Make sure you trade your plan, mind your risk, and so on. Good luck, and I'll catch you tomorrow. We covered a lot. It's time to go trade. Take care.